Hello, I'm joined today by Andy Ho, Chief Investment Officer at Vina Capital Vietnam Opportunity Fund. Hello, Andy. The Vina Capital Vietnam Opportunity Fund it's very popular among interactive investor customers. But for those investors who aren't familiar with the fund, could you just provide a little bit of background, the strategy, how long it's been running, the risk factors?
The fund is listed on the London Stock Exchange at the moment. It's part of the FTSE 250. Its AUM, or total assets under management, is slightly less than $1 billion US. The strategy of the fund is really to invest in businesses in Vietnam, private businesses, or what we call private opportunities, opportunities that are not widely available to the general market. And we will invest anywhere between $15 to $40 million into these businesses. And what we do is we ask to have due diligence rights, minority protections, investment protections in these businesses, and we ask the sponsor to commit to some sort of performance over the next 2 to 3 years as we invest. And the idea is to help these businesses grow over the next 3 to 5 years, and then take them onto the stock market as an IPO. Or another way for us to exit these businesses is we take them through a trade sale. We will sell a business, for example, to Diageo. We'll sell another business to Siam Cement or a Taisho, one of the world's largest pharmaceutical company in Japan. So there are various ways we can exit our investments, whether it's through an IPO or a trade sale.
The fund has doubled in value in the past few years, done incredibly well, but it has underperformed global markets since the autumn. Is there something specific behind the decline?
We have been very fortunate to have enjoyed a return of about 10 to 11% per annum on the average over the last 5 years, and over the last 3 years we've delivered about 14% return per annum. But you're right, over the last 12 months it's underperformed the global market. I think generally it's because global markets such as the US, Europe, and Japan, there's been a lot of what we call loosening monetary policy. There's been a lot of liquidity pumped into the market by the government, by the central banks and what have you. And such liquidity tend to flow, make its way towards the equity market in the various countries. Vietnam does not have that luxury. The government doesn't have the ability to pump liquidity into the market. And so as a result, the public equity market did not enjoy such an uplift such as markets in the US, Europe, and Japan. But in general, we see the growth opportunity in businesses in Vietnam growing at a rate of 15 to 20% per annum. So eventually we will see some of the liquidity from these global markets flow into Vietnam because they themselves have to find return that are better than the US, Europe, and Japan. And we believe that Vietnam delivering 15 to 20% return is very attractive at the moment.
The geographical proximity to China is obvious. So the influence of China on the region has been significant for a number of years now. How does that play out on your fund? Is it similarly significant, or are you sort of more geographically diverse, perhaps?
Yeah, like I said earlier, we focus primarily in Vietnam. China being our neighbor to the north has a pretty big influence in terms of how the political environment develops in Vietnam, as well as the economic environment developed in Vietnam. So we're close neighbors with China, right? But as far as our investments concerned, we typically invest in companies that operate in sectors that contribute or benefit from the growth of the domestic economy. We're not looking at the export-driven businesses. So we're looking at businesses that can benefit as the individuals' as wealth grows in Vietnam. They're spending on food and beverage, they're spending on homes, they're spending on education, spending on healthcare. So as the individuals get wealthier and wealthier in Vietnam, what are the things that they spend on? So that's the area, or those are the sectors that we focus on when it comes to investing. So, in summary, Vietnam is affected by China because of its close proximity, but not so much in terms of our investment, because we look for companies that benefit from the growth of the domestic economy.
The fund, it does trade at a discount to net asset value currently, and I think it's around 17% when I last looked. Now, I think it typically does trade at a discount to NAV, but the discount is narrowed over, I think, the past 3 years. Does that discount factor in extra risk? Is there something else involved there, and is such a discount justified, do you think?
The discount is really the price per share of the fund is slightly less than the NAV per share of the fund. That's why you have a discount. We're at about 10 to 15% discount at the moment. And it really represents the supply and demand of the shares. The demand of the shares is slightly less than the supply, and therefore we trade at a discount. It really doesn't reflect the risk of the investment. The risk of the investment is reflected in the currency or the underlying assets that we make the investment in. So it doesn't reflect the risk, but it does reflect an opportunity for investors to pick up the shares at a discount, because as a manager, we are motivated to narrow the discount. We narrow the discount by migrating the fund from the AIM market to the London Stock Exchange, the LSE. We try to narrow the discount by paying dividend. We're the only fund that pays dividend out of Vietnam. We also do a share buyback program to reduce the supply of shares in the market to close the discount. So in a way, the discount represents opportunities for investors to invest in our fund. And if the NAV remains unchanged and we're motivated to narrow the discount, investors will benefit.
Okay, well that kind of brings me on to the next question. I mean, the fund is as cheap as it's been since the summer of 2018. So for investors who don't have exposure to the country, who want to diversify into emerging markets, perhaps specifically Vietnam, what are the advantages of buying the fund? And you've explained a few there. There are other reasons that investors should consider the fund.
Yeah, on a macro basis, Vietnam is an economy that's growing 6.5% to 7% per annum. That's pretty good on a relative basis, on a global basis as well. So investors will ask, okay, how do I participate in this growth? Well, one way to participate in this growth is invest in Vietnam. So there are various ways you can invest in Vietnam. You can invest in what we call ETFs to get exposure to the capital markets. There are plenty of ETFs available. VOF is not a fund that's focusing on the capital market, although we do have exposure to the capital market of Vietnam. Like I said earlier, our strategy is to focus on private businesses to help them grow. And why is it interesting for private businesses? Because what we found out is in a market that has a lot of volatility, the liquidity is low. For us to deploy $15, $20, $30 million into a business, we have to be able to look under the hood to do due diligence in the business and to get some minority protection. So our approach to investing in an environment that is volatile and where corporate governance is on the weaker side and the liquidity is low, our private equity approach allows us to make an investment where the risk is a bit less. We can reduce the risk while at the same time enjoy the return that a typical capital market would enjoy, but lower the risk.
Again, I would at this point perhaps ask a fund manager about a few of their top holdings, stocks of interest, normally those that sort of stand out perhaps, or I can see might be an interesting story on the fact sheet. But I must admit with your fund that's not the case. I mean, I look at the top 10 holdings, and for the most part, I know very little about them, if anything at all. The names don't sort of ring a bell. So that's perhaps understandable. I just wonder whether, because of that, could you talk us through some of your most significant holdings and perhaps a bit of background and the thinking behind the investment process?
So perhaps if I give you the names, it's not recognizable, but just to give you the type of business they're in, that's why it's sort of exciting and benefiting from the growth of the domestic economy. So one, we like steel. We've invested in the largest steel company in Vietnam. We invested when they were number 11. We helped them grow their business and produce steel as a fully integrated steel complex for a lesser cost than their competitors. As a result, they are the number one steel producer in Vietnam. They produce about 2.8 million tons of steel per annum today. They'll go to about 6 million in the next couple of years. Steel is important in Vietnam. It's the foundation of infrastructure, the foundation of office buildings, residential buildings. So anytime you build these structures, you need steel. So that's why we like steel. But people ask, well, what about China? They can import steel into Vietnam. Well, Vietnam has a tariff on importation of steel, so they're protecting the domestic business. And so the domestic steel companies will continue to do well. We also like consumer businesses. We invested in the largest milk company in Vietnam. People are getting wealthier and wealthier, and they're buying more and more milk for their children, and they're eating cheese as well. So the milk business will benefit from the wealth of the growing wealth of the individuals. We also like jewelry. We've invested in the largest jewelry company in Vietnam. Again, if you're getting wealthier and wealthier, or if you understand the Asian culture, when it comes to a wedding, the wedding season, they give a lot of jewelries away as gifts. And so jewelry is a consumer discretionary business that's benefiting, again, from the growth of the domestic wealth in the economy. So that's just a sort of some examples of the business that we invest in. We've also invested in transportation. We've invested in airline businesses. We've invested in airport operators. We invest in a lot of the basic components of society and the economy that, again, will benefit as the individual gets wealthier and wealthier.
Okay, well, it sounds like a lot of the companies that you own have done incredibly well. I'd just like to ask you about exit strategies and sort of perhaps some of your recent trades. How often does the fund trade in and out, and sort of what is the exit strategy?
Yeah, so the fund is not we're not an open-ended listed fund or capital markets fund, so we don't really trade. Right? We invest 10, 20, 30, 40 million dollars at a time, and we hold on to these investments for 5, 6, 7 years. When it comes time to exiting these companies, we either take them onto the stock market as an IPO, and then we find a buyer who's interested in a large block. We'll move a large block to these buyers. Or we can sell the business through a trade sale. Like I mentioned earlier, we sold the largest vodka business to Diageo out of the UK. And so our options when it comes to exit is either take the companies to an IPO and sell the shares when they're listed, or we sell them to a trade buyer. Okay, or strategic buyers, if you will. So we do less of trading, and we do more of these strategic movements of blocks or strategic sales of the shares.
More than a third of the portfolio is made up of real estate or construction related businesses. I mean, is this typical of a fund investing in a fast growing economy? Again, you have a good spread, and you talk about steel, but in sort of other construction businesses, if you could explain sort of some of those investments.
A big component of the GDP growth in Vietnam and most emerging and frontier market is the real estate development side. We're talking about homes, hospitals, office buildings, residential buildings. Even infrastructure requires development of infrastructure and steel and cement, etc. So we sort of combine all that together. We call it, you can call it real estate risk, or we can call it construction risk, but it's really together. And it sometimes includes banks too, because they provide the credit for a lot of these projects to develop. But yes, you're right. In terms of construction material, real estate, and construction services, we lump together, and we're about 1/3. And it's a huge component of GDP growth. And as the GDP grows, they need this. They need the steel, they need the cement, they need the construction company, they need the development companies, they need the urban development company, etc. So it's a big component of GDP growth.
That's all my questions. Thank you very much indeed for joining us today.
Sure, you're welcome.